It's that time again, everybody, for everybody's favorite segment on our channel, the market update. And it's been a minute since we've done one, and so much has changed. Hi, I'm Jason Geroux. I'm designated broker and owner of 410 Real Estate, a multi-million-dollar producing real estate brokerage here in Gilbert, Arizona. And I am thrilled to have you here on our channel. If you're new here, welcome. Happy to have you here. Do me a favor before we start. Hit the subscribe button, the notification bell, so that you're made aware of these videos as we post them. We try and give you real estate information, market updates, introduce you to local businesses around town, and we even throw in a few videos here and there about mindset. And if you follow us on social, you might even have a chance of getting some really cool dad jokes. So it's a great time. Thanks for being here. Today we are going to talk about the market update for the month of May. So it is June, but we look at stats from the previous month as always. So we're going to look at the month of May. And I'm going to start this by saying everyone is in kind of an unsure, panic type mode with what's going on with the market right now. Rates are increasing, home prices have increased, supply is now increasing, which we'll talk about. So I'm going to go through the numbers and then I'm just going to give you a real brief interpretation on my end of where we're at today and maybe how to make the best decision for you and your personal real estate goals. So let's go with that. So right now, sales in the month of May, we sold just under 8,300 homes, 8,278. That is a lower number if you've watched these market updates before. We are down about 9% year over year and about 5% month over month. So there is a lowering of demand at the moment. New inventory, new listings being put on the market is up 13% month over month and 21% year over year. So we have a lowering of demand, but we also have an increasing of supply. Total inventory on the market is up 37.5% month over month and 44% year over year. What's the difference? New listings, just that, new listings that hit the market. Total inventory is new listings and listing inventory that was left over from the month previous. So 13,870 listings currently on the market. Of those listings, approximately 21% of those are, about 24% of those are under contract in one way or another, whether they're accepting backups or they have contingencies attached to them. About 24% of those. So you leave 76% of that 13,870 still available for purchase. So we've talked about months of supply, a typical balanced market where there's no clear advantage between a buyer versus a seller in terms of negotiating power, position, things like that is about 4 to 6 months. We are still at 1.68 months supply. Yes, that is higher than it has been if you've been watching these market updates. We've been as low as a half a month supply. This year even, we've been that low. So 1.68, definitely an increase, but still very much on the seller side of the fence. So now there's two prices that we look at. There are list prices, what I call fantasy land, right? Because we don't know if those are going to sell at that price or not. And actual sales closed price. That's reality land. So fantasy land, reality land. In fantasy land, average new list prices are up 24% year over year. And the median list price is up 25% year over year. So if you look then at average actual sales closed price, we're up 16.7% year over year at 589 100. That's the average. Our median price is 475, which is up almost 22% year over year. So it's still been a very, very, very healthy growth year in real estate in the Phoenix area. An increase is still projected on average sale price for the month of May. Ahead of the month of May now for June. But the median sales price is forecasted to stay right about the same at that 475. One interesting thing that we did see this time is there's just over 1,000 homes in our market that are foreclosures pending. Now that doesn't mean that we've had homes foreclosed on. That could mean someone's delinquent in their mortgage. Something could happen if action is not taken. If you're one of those people and you're watching this, please know you most likely have equity in your home, and there's no reason, in my opinion, that a foreclosure should be necessary if we can sell the asset for you and get you out of the foreclosure situation. So contact us to talk about that if that is you, but that number is slightly up it's down month over month, but it's up almost 15% year over year. Average days on market is the last thing I'll touch on. And this number is a bit skewed, and I'll tell you why. Average days on market right now is 28. That's down a day, month over month and year over year. It is still a bit skewed because the days continue counting as long as the listing is not in a pending status. We do have under contract statuses that don't trigger a shutdown of the day count. So, anecdotally, couldn't think of the word there for a second. Anecdotally, I would say from my experience, we're still in the 7 to 14 day time frame to get homes under contract, which is definitely slower than we got spoiled with, which, we put a napkin and a toothpick in the front yard and sell it in 2 hours. We got a little spoiled there, but 7 to 14 days is still a very healthy days on market. So what does all this mean? Everybody has been calling me lately. Not everybody. Obviously, if you didn't call me, I can't say everybody. But a lot of people have called or emailed and asked me, where is the market headed, Jason? We're hearing interest rates are up. We're hearing supply is up. We're hearing there's going to be a crash. We're hearing the bubble's going to burst, all these different things. I want to address a couple of things because I really think a lot of this comes down to education. Historically, if you look at mortgage rates, we have been in a ridiculously low mortgage rate season. Historically, mortgage rates are not 2.5% like they have been. Historically, mortgage rates are not even 3 or 4% like they have been for so long. So I would say we are getting back into what we would consider more of a historically normal interest rate world. The problem that we have seen, and I will acknowledge this, is that they've gone up so quickly. We've gone up, in some cases 2 full points just in the last 8 to 10 weeks. I'm not a mortgage guy, so don't quote me on all those numbers, but from what I'm hearing from my clients and from my mortgage partners, it's pretty drastic in terms of how quickly they've gone up. We are probably headed towards some sort of a recession in this country just because of where inflation is and other factors, supply chain and different things. But I want to let you know that recession does not equal housing crisis. How do I know that, and why do I say that? People try and tie those together. If you go through a recession, people think your housing market's going to crash. If you look at the last 6 times we've experienced a recession, 1980, 81, 91, 2001, 2008, and even as recently as 2020, our prices, housing prices, only went down in 2 of those recession periods. One of them was 2008, which was obviously a bubble burst and something pretty crazy where we dropped almost 20% in value on average. But the one in 1991, the other one that went down 1.9%. So that's still a minor blip in terms of a recession. All 4 of the others, though, one of them was at 3.5%, the other 3 over 6.5% increases during recession periods in housing value. Why? Because housing is usually the best hedge against inflation. This is why you see large institutional investors and hedge funds and people like that coming in and buying up real estate by the hundreds because they know it's the best hedge against inflation. And last time I checked, I don't think hedge funds and investment companies are in the business of losing money, and so they feel real estate is still a very solid investment. Now here's what I'll say if you are an individual homeowner, not an institutional homeowner. If your goal was to hold a property until you reach the highest potential value that you could get for that property and then resell it, I can tell you we are most likely at the top of the market. We might continue to inch up, but you are not going to see 20% year over year growth like we've seen. So that being said, if it's your goal to sell at the top of the market, now might be a good time to sell. If you're a buy and hold investor whose goal is cash flow off of a rental property, the rental market is still very strong. Rents are still increasing, and it still may be a good time for you to hold the property as long as you continue to cash flow. If you're bringing in $500 to $700, $1,000 a month above and beyond your obligations, it may not make sense for you to sell the property. You're doing just fine. So that being said, you have to look at your individual goals. Is your goal the appreciation or the cash flow? Do you need access to cash now? Do you want your money tied up in real estate, which is a good hedge against inflation, rather than playing in the stock market, which we've seen go all over the place and predominantly down in recent months? What do you want to do with those things? You also have to factor in things like capital gains taxes and other financial things that I'm not qualified to talk about, so talk to your financial advisor or your tax professional about those things. Here's the message, guys. I'm 10 minutes into this video. I didn't even want to make a 10-minute video, but there's so much going on right now. I know that it took a while. Here's the bottom line. This is not a time to panic. You're going to see a lot of real estate agents out there panicking. They're typically the agents that either are new to the business, they don't have the experience in the business, they're part-time agents that jumped in the market just to make a buck quickly. They're not focused on keeping up with trends or listening to national market data. Speaking of which, side note, Keeping Current Matters, which is a very good resource for real estate information, combines 7 different prognosticating sources about the prospects of 2022, and on average they still say another 9% growth this year. So take that for what it is. I think it's based on price point. In Phoenix, we're seeing $400,000 to $600,000 moving still. You get up in the $800,000, $900,000 to $1 million and plus. Now we're starting to see some price reductions, some longer time on market, some negotiations happening where the seller's giving some concessions, even do some creative things in terms of helping buyers with their interest rate as a seller to help keep as many buyers as you can in the game. So there's a lot of creative ways to do this, but please don't panic. Don't just listen to what the news tells you, because they're looking for what? The ratings. So they're going to tell you what the most rating-driven information would be, rather than the whole truth, nothing but the truth, right? So if you're having questions, if you want to know what's going on, please feel free to reach out to us. Text me, call me, email me, comment below. We can set up a time to talk, but now's not the time to panic. This could still be a great time for you as a real estate investor, or as a homeowner that wants to move up, move down, move sideways, move out of state, wherever you want to go. I hope this was helpful. If it was, do me a favor, hit the share button, send this to a friend, let them know that it's not time to panic. There is no evidence of a bubble. I didn't even touch on that. You can look at every chart that we've seen, and there is no bubble forming. It's just been a straight incline, and now we're kind of leveling off. But there's not a bubble to burst. So don't listen to those guys. Talk to a professional that knows what they're doing, and we'll be happy to help. Thank you so much again for being here for this video and on our channel, and we'll see you again on the next one.